Good morning, folks. My name is Chris Chandler. I'm president of PFL. We hope that everyone had a fantastic weekend. Seems like it is cold everywhere, even down here in Florida, it's snowing. Oh, happy Groundhog Day. We'll soon find out whether or not we got 6 more weeks of winter. I think we know the answer to that one. The Dow closed lower on Friday of last week and lowered 206.24 points week over week. The S&P closed lower on Friday of last week, but was higher 23.24 points week over week. The Nasdaq closed lower on Friday of last week and lower 39.42 points a week over week. In overnight trading, down futures traded lower and are expected to open down 57 points from Friday's close. Oil prices settled lower on Friday of last week, but higher week over week. WTI traded down 21 cents per barrel on Friday of last week to close at $65.21 per barrel, up $4.14 per barrel week over week. U.S. commercial crude inventories decreased by 2.3 million barrels week over week. U.S. crude inventories are 3% below the 5-year average for this time of year. Total motor gasoline inventories increased by 200,000 barrels week over week and are 5% above the 5-year average for this time of year. Distillate fuel inventories increased by 300,000 barrels week over week and have turned positive at plus 1% above the 5-year average for this time of year. Propane and propylene inventories decreased by 4.7 million barrels week over week and are still a whopping 41% above the 5-year average for this time of year. Propane prices closed at 64.5 cents per gallon on Friday of last week, up 4.9 cents per gallon week over week, but down 27 cents per gallon year over year. WTI is poised to open up 61.74, down $3.47 per barrel from Friday's close. Total North American weekly barrel volumes were up 2.61% in week 5 compared to the same week last year. 4 of AAR's 11 major traffic categories posted year-over-year decreases. The most significant decrease was from forest products, which was down 16.26%. The most significant increase came from non-metallic minerals, which was up 27.7%. North American rig count was up by 3 rigs week over week. U.S. rig count was up by 2 rigs week over week, but down by 36 rigs year over year. The U.S. currently has 546 active rigs. Canada's rig count was up by 1 week over week, but down by 26 rigs year over year. Canada's overall rig count is 232 active rigs overall year over year. We are down 62 rigs collectively. Folks, we are watching a few things out there for our readers. We are watching Canadian crude by rail exports. The Canadian Energy Regulator reported on January 26 that 85,055 barrels were exported during the month of November. That is up from 78,117 barrels in October 2025, an increase of 6,939 barrels month over month. See PFL's rail report for further details. We continue to watch oil and gas. In the first month of 2026, the oil and gas industry has been shaped a mixed, strong quarterly earnings and a lot of maneuvers by the big guys. Despite the backdrop of global oversupply, Chevron and Exxon are delivering results that topped expectations. The repositioning of Venezuelan crude flows is rapidly reshaping international crude markets. We have a lot to say on global oil and gas markets in today's report, and you will find it a very interesting read. We continue to watch left-wing Canadian Prime Minister Carney. As our readers are aware, PFL has offices in Canada and does a bunch of business work up there. And many ask, what is wrong with Canada? What are they thinking? What are they doing? Well, we try and explain it in today's report, what is wrong with Canada, and a step-by-step process on what the Carney Liberal government needs to do to fix what the Liberal government started to begin with. Kind of like down here. We are watching private equity. U.S. private equity giant, the Carlyle Group, agreed to buy Russia's Lukoil International assets, a sweeping portfolio spanning oil fields, refineries, downstream holdings across the world. More to say on this one in today's report. We are watching chemical companies. Dow's announcement that will cut roughly 5,000 jobs globally is being described as part of a broader effort to reduce costs, simplify operations, and rely more heavily on AI. We expect more to come from other chemical manufacturers. We are watching key economic indicators. This week we focus on producer price index and consumer confidence. Prices are up and confidence is down, bottom line. Please read PFL's Rail Report today for further details as it relates to today's podcast. In addition, we also highlight the latest refinery runs. Petroleum rail cars are up week over week. See details in today's report. In addition, we report all the latest import and export numbers on all petroleum-related products. We, of course, have quite a few detailed graphs and charts for your viewing pleasure. Please call PFL today for all your rail needs, including storage, leasing, subleasing, cleaning, repair, flaring, scrapping, nitrogen generation, and transloading services. Please pass on our report to friends and colleagues. We do it all for you, folks, and it's free. Have a great week and be, most of all, safe out there. And we'll see you next Monday.